Hi everyone, welcome. My name is Mike. In case you are new to this YouTube channel where we cover lots of stocks, and I can say with confidence that most of the stocks I've covered in this YouTube channel have gone on to do well. In this video, I'm going to focus in two stocks, and the one is going to be Talkspace and the latest earnings that just came out yesterday, and I want to clear out some information about that because I see a lot of people are freaking out, retail investors, and I mean, most of them are, I guess, based on the headlines that comes out that says, all the headlines for Talkspace is, Talkspace missed expectations. Okay, no, they didn't miss expectations. There's something that just really messed up with the way the earnings are presented. And I'm going to clear something out, and this is just my opinion, doesn't mean I'm right, but I'm totally against with the way the earnings were presented. And the other stock I'm going to talk to you about in this YouTube video is Guess, the fashion icon clothing company, and not just clothing. So we're going to look at that because that's something very, 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 very extremely important that I want to show people, because I've noticed something very important. Like, this is serious, and it's in a positive way. First, before we go to the earnings, I want to clear something out. The first time I talked about Talkspace and called it a buy, personally speaking for me, was at $2.08 back on September 17, 2024 over on the Discord. So I did even put a screenshot, and I showed that the purchase I made for Talkspace, which was 4,000 shares at $2.08. And if anybody got in at $2.08 today, even with the earnings results yesterday and the way the stock performed, you're massively up. You're up big time. I also did a YouTube video for Talkspace for everyone to view if you're not part of the Discord, and that YouTube video was when Talkspace was at $2.38. Again, even if you watched the YouTube video at $2.38 and got in, you're up massively right now. But being up massively on Talkspace isn't good enough for me, because I don't believe Talkspace got the treatment it deserved yesterday. I mean, the earnings, let me explain what I mean. So coming over on the Discord, but also on the YouTube community section, free for everyone, members or not, to see, I posted this information, which is basically I'm saying, all right, so here's the ticker symbol TALK. This is great news, not bad news. Talkspace right now trading at $3.29. My fair value, and what the fair value most analysts are giving, is $12.48. So yesterday's earnings was presented as Talkspace missing out, which is no. I mean, they didn't miss out. For their EPS, guys, what, 7 cents up from 12-cent loss from the year of 2023. That's a positive. So there's nothing negative about that. They had a revenue of about $187 million, which was up 25% from 2023. There's nothing negative about that. The net income, guys, was positive $1.15 million, which was up from negative. Now, I should have put negative here, but it was negative $20.3 million in 2023. I repeat, net income positive for 2024 at $1.15 million. And in 2023, it was negative 20. So we have a huge positive result on that too. Let's look at profit margins. They reported 0.6%, which was up from last year, 2023. And they also made a move to profitability. Talkspace, with the earnings yesterday, reported massive improvements of at least 15 to 20% all across the board, with that compared to 2023. The only excuse analysts gave to excuse the sell-off, they stated that Talkspace failed in their direct-to-consumer sales, and that was down 35%. Yes, in the earnings yesterday, Talkspace said that direct-to-consumer sales were negative 35% compared to that of 2023. But it makes me question whether this was a deliberate excuse for a sell-off, because there's no way, and don't tell me that I am the only human being on earth to have known and I've said many times in my YouTube videos that Talkspace is no longer direct-to-consumer. They have shifted. From the beginning of 2024 and from 2023, really, they shifted their model from direct to consumer to payer, direct, to, and I've said it, how many times have you guys watched my YouTube videos or on Talkspace from last year, where I've mentioned constantly that Talkspace aims at enterprises, cities, schools, Medicare, TRICARE, the partnership with Amazon. They aim to go from the big leagues and get the members that those big leagues have onto their platform. They no longer go directly to each citizen to try to commercial themselves and get them to sign up. That's not a model they have. They shifted from this. So if you're seeing negative 35% direct to consumer decline, well, they no longer pursue that model. It's something that I've said. I mean, I don't know why analysts are surprised in the markets. Like, where were you guys? Like, I mean, nobody follows the SEC filings that Talkspace has been coming out for so long, and everything that they've talked about in the business model. So if 2024 was way better than 2023, the stock should move higher. But what about forward guidance? Did Talkspace give a negative forward guidance? Let me remind you that Talkspace ended 2024 with $187 million in revenue, debt-free and profitable. For 2025, their forward guidance, guys, is positive $235 million in revenue, which is record-breaking. That's like an all-time historic record revenue that they're going to make as a company. They've never made $235 million. They're going to smash their already new record of $187 million that they made for 2024. They said that they project forward guidance of profitability yet again for 2025. So where is the negative in all of this? I don't understand. The sell-off was just completely stupid. Over the last 3 years, on average, earnings per share have increased by 80% per year. But the company's share price, guys, has only increased 30%. What does that mean? It means that there is a significant lag with the earnings growth. Frustration should only exist if you don't know what you bought to begin with. And also if you don't understand the earnings, right? Or maybe you understand them and you find it negative. That's fine. But personally speaking, for me, I know what I bought. If they provide me the forward guidance that they've already given for 2025, why should I sell? This is a really good, the results were good and the guidance is good. All right, so let's move over to the second stock, which is Guess Incorporation. Ticker symbol GES. And as you can see right now, Guess is trading at $12.40 right here. Flexing the iconic upside down triangle logo with a question mark, Guess is a global fashion brand known for its trendy clothing, accessories, and denim wear. Guess started by Marciano brothers who sought to redefine denim with stone-washed slim-fitting jeans that featured their distinctive triangular logo. The design quickly gained popularity as Guess' image became more prominent in the fashion world, and today, Guess is known for its youthful and fashionable clothing accessories and fragrance lines. I want you guys to remember this. This is what I found. These are the key things that I found that instantly tells me that, you know what? Something is not right here, and I think that the stock it has a really good valuation. I would give it a really awesome value. I'd give it like a super A+ valuation right now. And if a company has an A+ valuation, I don't know. It's a good start, right? Now watch this. They have a market cap of $638 million right now, currently, right? So I want you to remember this. I'll bring these numbers back up again as we go along to remember this. So it's critical to look at this market cap of $638 million. What about the PE ratio? 7.02. What about the forward PE? 5.8. And they also have a dividend, right? So the PE ratio and the forward PE ratio are showing us that this company, the stock has a really good valuation. It's trading very cheap, and it's reasonable, and it's very nice. The market cap is intriguing. So this company has a $638 million market cap. If I had the money and I wanted to buy Guess and make it my company so I can hand it over to my kids, the minimum I would have to pay is $638 million. That's not bad for a company that made last year nearly $3 billion in revenue. So right off the bat, I mean, that just tells you something's going on here. Maybe this market cap is so low because the company is going to have really bad years ahead. or maybe they have a lot of debt. So that would pretty much offset the whole market cap to revenue thing. But it's really not like that. So I'll show you. Let's take it one step at a time. If you look at the valuation for the stock all across the board, it's getting stunning valuations. Analysts say that the sales trends were unexciting over the last 5 years, at its 2% annual growth was below the typical consumer discretionary company. All right, so it's not exciting that they only have about an average of about 2% growth each year for the past few years. But you know what? It is positive growth. It's not negative. It's not like the company, estimated sales growth of 3.7% for the next 12 months implies demand will slow down. I don't really understand how a growth of 3.7% implies slowdown in demand. And I can see that if you look past in the past years and saw that the growth of the company was higher percentage-wise, and now it's only going to go to 3.7%. So there's a slow demand. But again, it is a growth of 3.7%. They have a below-average return on capital. Now we're going to focus on that later in a chart I'm going to show you. What does that indicate? It indicates that management is struggling to find compelling investment opportunities, and it's true. Guess is struggling to find compelling investment opportunities, specifically within the United States, where growth has slowed down. But growth for Guess in Europe has increased. If anyone is watching me from the European Union, from the European continent, let me know what you think about Guess. And if you are a female, let us know, because I think most women in Europe are in love with the Guess brand. Revenue $738 million versus the analyst estimates of $747. Still, they had a 13.4% year-over-year growth. Year-over-year positive growth. Again, we're complaining about that, a positive growth. Management lowered its full-year adjusted EPS guidance to $1.93 at the midpoint, a 24% decrease. So there's a negative part about that. But even if the stock is struggling, you get to a point where, if you like the company, first of all, the stock trades cheap. We can see that the quarterly revenue is, it's fine, it's doing well, and there's about a 2% increase through the year. You can look at it here also. Guess year-over-year revenue growth from 2019 to 2024. In 2020 and before, things were not pretty. From 2019 to 2020, right? Things were not pretty. Here is basically all of year 2024. So all of this negative is due to the pandemic lockdowns, and Guess has lots of physical stores. So when you had the lockdowns, obviously it didn't do well. In 2021, it exploded and then came back down to normal levels. And from 2023 to 2024, there is significant growth. But Guess earnings per share, guys, grew at a remarkable 18.9% compounded annual growth rate over the last 5 years, higher than its 2% annual revenue growth. This tells us that the company became more profitable on a per share basis as it expanded. And Guess trailing 12-month return on investment capital, right, it's around 10% for Guess, but peers have a positive 25%. What do analysts think about Guess stock? They think that it should trade at a low of 16 and a high of 27, and it's currently at 12.40. Let's not forget that Guess also pays a really gorgeous 9.68% dividend yield. That's about $1.20 annual dividend. That's really good for a $12 stock. So going back here again, all right. So we're looking at a company that made last year $3 billion. They have been the past 5 years an 18% compound annual growth rate in the earnings per share positive. They are positive free cash flow. The debt, okay, $1.4 billion, but it's still very extremely manageable, and they are making way more revenue, and they can still finish with positive free cash flow, positive net income. When you look at the market cap, guys, at $638 million with the PE ratio and the dividend, and you put it all together, and that this company is on a 5-year rebound, doing well, growing. They, each year they still have positive growth. I believe that the stock at $12.40 is a buy. Personally speaking, for me, I think that Guess will still sort of struggle this year. I don't think it, not struggle in like a very serious way, because I think the stock is way undervalued. In my opinion, this is a buy, personally speaking, for me, right? Not for you. So I really like the stock. I think that now is a time to buy Guess. And my personal price target for Guess by next year into 2026, just personally speaking for me, is $18 US. So we'll see. We'll revisit the stock and see if I was right. Thank you very much for watching this YouTube video, and I wish you all the best. Take care.